Hello, welcome back to the series of lectures which explains the basic concepts in economics in simple and lucid language. My name is Shishir Sandekar, working with BYK College of Commerce, and my today's topic is basics of budget. Before going to the budget, it will be more better to know the basic concepts in budgets. My name is Shishir Sandekar. Every economic system has the same objectives. There are two types. One is long term, second is short term. So for the long term, I could say to increase the gross domestic product, national income, per capita income, as well as to achieve higher economic growth rate, to maintain price stability, to control inflation, to control recession also, and as well as to reduce the poverty and inequality in the distribution of income and wealth, also to increase the employment level and standards of living. There are different policies to achieve these economic objectives, such as monetary policy, which deals with money and money supply through the central bank, that is Reserve Bank of India, can control that and can use this policy. The second one is fiscal policy. FISC means the treasury, that how the government earns the revenue and how the government spends the revenue, that is actually the fiscal policy. The third one is income and price policy, which determines the levels of income as well as which controls the prices. Foreign exchange and trade policy, controlled through the foreign exchange rate as well as import-export restrictions. Agricultural policy, industrial policy, service sector policy. To each of that sector we can find out, for each of the objective we can find out the different policies. Now coming to the original subject, that is budget. Budget is originally is an instrument of fiscal policy. Fisc, as just now I have said, that it is a government, that is the treasury. How the government earns the money and how the government spends the money is actually determined, designed through this policy. So this policy has one of the instrument of this policy is budget. Now coming to the specific definition of budget. So as it is mentioned, budget is an annual financial statement. So statement for 1 year, annual financial statement for estimated receipts and estimated expenditures of the central government, state government and local government. So according to the Article 112 of the Constitution, this budget is designed for central government, and according to the Article 202, how the state government can earn the revenue and how they can spend the revenue is mentioned, or this is defined according to these articles in the Constitution of India. So again, I would like to say budget is a financial plan of the government, statement of financial plan. That means how the government is going to spend also. So budget consists of revenue as well as expenditure. Actually, if you will go, whenever you will go through the budget document, you will find out three types of figures. The first one is last completed year, actual figures of the completed year, the probable revenue and expenditure estimates of the revised for the current year, and estimates for the anticipated year, that is for the anticipated revenue and proposed expenditure for the next financial year. So suppose right now we are discussing about the year, the budget of the year, say 2021-22, which is presented on 1st February. So this budget will definitely consist the completed year, that is 1990-20, that is actually the completed year, so actual figures of those. Then for 21-22 we can have probable or revised estimates of those year, because the year is not completed. And the third, for 21-22 we can have actually the budget, that how the government will earn and how the government will spend the revenue in the next year. So budget is for the next year or expected year. Now originally the word budget is derived from the French word budget. Budget means a small bag. Previously the budget documents were presented through a bag, and so it is called as a budget. Each government plans to undertake various activities and policies which have their financial counterparts in the form of collecting the revenue and incurring expenditure. So government wants to start new road project, infrastructure spending. So again, it is mentioned in that budget. So budget is actually a description of fiscal policies and financial plans according to it. So it is a description of fiscal policy and financial plan for the coming year. As we are aware, everyone is aware or everyone is interested in budget, that what I can get from that budget. Whenever I used to visit any relative or friend, that friend is more interested to show me the recent photographs of his wedding anniversary or something like that function, and it was that part when I have visited that program. So I would like to go through that photographs definitely, but I would like to find out myself in that budget or myself in that photo. In the same way, why I am interested in budget, because I want to find out my place in that budget. So we are mostly interested to find out ourselves or our reflection in that budget, that what the government has did for us. Okay, now coming to the next idea, what are the types of budget? The first one is lame duck budget. If you have observed any cricket match on the TV, and when a batsman cannot perform, he comes back, he goes to the bat and comes with only 0 run, performs only 0 run and got out. And then at that time, the cameraman shows a duck when he has not performed anything. So that is an representation, the lame duck budget. If the existing executive government may not continue for the full year and elections are due, then it is expected that government need not have to declare any special programs, or they have to just go for the voter account. Just they have to have a say, we can say they have to present the expenditures to the parliament, and parliament should pass those expenditures. So this is actually the idea of lame duck budget. When the government, it is not expected that government should do any specific announcement for the expenditures as well as taxation. There is another type of budget which is known as supplementary budget. Again, the budget which covers only a part of year, and if the revenue received fall short of the expected ones, then the government will have to provide supplementary budget. Sometimes it becomes necessary to provide that kind of supplementary budget. Suppose, even if I remember that when the original economic reforms programs were introduced by Prime Minister Narasimha Rao, and during that period Dr. Manmohan Singh was appointed as a finance minister, and he presented the first budget in the month of June or July. The same that he is not going to complete, but still even that in that supplementary budget also he created a history. So it is not necessary that supplementary budget should be a lame duck budget. Okay, now coming to the next area, that what is the period of budget? It is expected that the financial year in India, again I must say in India, it is from 1st April to 31st March. Why it is so? It is simply because in India, agriculture contributes a major portion to the GDP or GVA, gross domestic product or gross value added, or GNP. So it is, again, I know that agriculture depends on vagaries of nature, so monsoon. So again, so prior to the start of that Kharif season, specifically prior to the start of that busy season of the economy, that is the Kharif season, prior to that, the farmer must get an idea that how he is going to spend, how he is going to earn, or how the government will help him. So for that reason, the period was specifically placed from 1st April to the 31st March. Now again, this was the tradition from 1947 onwards to till this date also. But nowadays, the proportion of agricultural sector is going down, is shrinking, and the proportion of services sector is increasing. So everyone is now interested or suggesting to the government that change this period from 1st January to 31st December, and I hope that very soon we can have the period from 1st January to 31st December also. And in that move, we have observed that previously the budget was presented on that 28th of February, but nowadays it is presented on 1st of February. So slight change has been made, but again in the same path. Previously the time of presentation of budget was 5 p.m. 5 p.m. in the evening, and it's just because the British government wants to impose their laws. They want to find out the Indian budget in their office timing. So the timing was 5 p.m. Dr. Yashwant Sinha was the first finance minister who presented or who changed that budget timing from 5 p.m. to 11 a.m. So I can say he can be called as a first Swadeshi finance minister. Okay, going back to the basics, government accounts. So the budget is actually coming with different. There are three types of basic accounts. The annual financial, the budget is presented in different documents. The first one is annual financial statement, which shows the receipt and payments of the government. Annual financial statement, that is the budget, which shows the receipt and payments of the government under three parts. Which are those three parts? The first one is consolidated fund. Consolidated fund. Second is contingency fund, and third is public account. So what is that consolidated fund? All the revenues received by the governments and loans raised by the government, and also the receipts from the recoveries of the loans or other receipts granted by it in the form of consolidated fund. So whenever a government wants to earn money through these sources, it must be mentioned in the consolidated fund. Along with that, all expenditure of the government which government will have to spend or will have to incur, they have to incur it from the consolidated fund. So it must be incurred from the consolidated fund, and the last line is most important. No amount from that consolidated fund can be withdrawn from that fund without the authorization from the parliament. So this is the most important thing, that without authorization of the parliament, you can't spend anything. So this is the most important characteristic of that consolidated fund. Second is contingency fund. Again, we might have observed different natural calamities or disasters for which we have to spend. The government will have to spend. So occasion may arise. It may be COVID, Corona, or say cyclones also. So occasions may arise when the government may have to meet urgent, unforeseen expenditures. So at that point of time, it may not be possible to take authorization from the parliament. So contingency fund is actually placed at the disposal of the president to incur such expenditures. So parliamentary approval is necessary, but not at that point of time. Later on they can have that parliamentary approval. So an equivalent amount from consolidated fund is subsequently obtained from the amount spent from the contingency fund, and that corpus fund is also maintained by the government of India. And the third one is public account. So whenever I used to save in public provident fund, national saving certificates, so all these, the revenue, these types of revenues which is collected by the government is not the original amount of the government. They do not own it, but they just work as a banker. So the government acts more as a banker. For example, transactions related to provident fund, small saving collection and other deposits, the money thus received is kept in public account. That means the government has the right to spend it, but at the same time it is obligation on the government that government should pay back it at that point of time whenever it is due. So public account funds do not belong to the government, do remember, because I am going to give money to the government through PPF or through the national saving certificates, and the government is going to pay back in a due time period. So it must be paid back sometime, or to the other persons, the authorities who deposited them. The parliament authorization is naturally not required for that. So these are the three basic accounts for that. Now coming back to the budget as such. So there are different parts of budget. First, I would like to classify the budget in revenue side and capital side. So what do we mean by revenue budget and capital budget? In simple words, that whenever I used to spend it to purchase vegetables or grocery, then it will be my revenue expenditure. When I am earning income through my salary, then it is my revenue income. But when I used to purchase gold, shares, land, some asset, then it will be called as capital expenditure. And whenever I am going to sell that gold and I'm going to earn the money, or if I'm going to sell building, land or something different, then naturally that will be my capital income. So in the same way, the government budget is divided into two parts. First is revenue budget and second is capital budget. So revenue budget consists of revenue receipt of the government, which include tax revenue and non-tax revenue, and revenue expenditure includes which is incurred on normal running of the government departments to pay the salaries of the government employees. So naturally those salaries, pensions is nothing but the revenue expenditures. So expenditure on various services, even interest charges of debt which does not result in creation of asset. So in this way I would like to say there are two parts, revenue receipts and revenue expenditures. Similarly, the capital account of the budget consists of capital receipts and the main item is market loans. I know that the government cannot raise all the resources from revenue, from taxes, then naturally they have to rely on market loans or borrowings. Recently in the budget of say 22 or 21-22, we have observed that government is mostly relied on the borrowings. So these are the capital expenditures, capital receipts. So capital receipts include market loans, borrowings by the government, or government may issue treasury bills, T-bills known as, so, or loans from the foreign government or from foreign agencies like say IDA or World Bank, so IBRD or IMF. So International Bank for Reconstruction and Development or International Monetary Fund provides short-term loans or long-term loans, and so those loans are shown on the capital account. At the same time, recovery of loans from the state government, that is again an income for the central government, and the most important part nowadays becoming popular, that is disinvestment. The government is not interested to run some business, and so they would like to sell their share to the public. And so disinvestment in recently LIC or say State Bank of India or other companies, the structure, the basic structure will remain same, but at the same time government wants to sell some share to the public, so that is idea of disinvestment. Along with that, just now I have said that revenue they have earned through PPF, LIC, GIP, PF, so they are all, the government is again going to collect some amount of money from this way also. Now coming to the capital payment or capital expenditures. So naturally if the government is going to create roads, government is going to construct the airports, the government is going to create some industry, so building, machinery, equipment, so the government invested in such assets which are actually the expenditure which are creating assets, so these are known as capital expenditures. I do hope that you must have understand that regarding my private budget, I must spend more to purchase land, building, machinery or gold or shares. Similarly, the government must spend more on the capital expenditure. So unfortunately, the government will have to spend more on the revenue account, that is to pay the salaries of the government employees. Okay, now classification of expenditures. So there are three types of services: general services, economic services, and social services. Previously there was an idea to bifurcate the expenditure in this way: developmental expenditure, non-developmental expenditure, or plan expenditure and non-plan expenditure. In developmental expenditure, that government is going to create some dam or road or industry, then it will be called as developmental expenditure. When the government was spending on education, it was called as non-developmental expenditure. Later on the classification has abandoned. Similarly, plan expenditure, that government, previously we have 5-year plans, and for each of that 5 year the government spent the amount on specific purposes, so it was called as plan expenditure. for agricultural sector, rural sector, irrigation, food control, energy, industry. So in this way, the government prepares plan and accordingly the government was spending. And regarding the non-plan expenditure, the loans which were already taken by the government will have to pay the interest on that. So that is interest payment, then expenditure on defense, then the most important item was subsidies, food, fertilizers and export. Now the export subsidy is perfectly removed, but food and fertilizer subsidy still exists. So along with debt relief to the farmers, that is again a non-plan expenditure. So in this way, previously it was classified into plan and non-plan expenditure. Now that tradition has been delinked. This was again how previously the budget was shown. The revenue received, non-tax revenue, tax revenue, net to the center, because as we are aware that some part of the government collects, central government, and some part has been allocated to the state government, so net to the center. And then the fourth one is capital receipt, how the government earns the money, recoveries of loans, which already the loans were given, recoveries of loans, then other receipt, borrowings and other liabilities, then total receipt, that is the revenue receipt plus capital receipt, then non-plan expenditure. This is again I must say that this was the old type of classification. So non-plan expenditure on revenue account, how much that is interest, defense, subsidies. So again interest payment, then capital account, on that capital account how the plan expenditure will take place, on revenue account. In this way the classification has been shown. So this was the previous classification. Now how do we earn the money? That is an important part. Yes, the gross tax, this is again the old type of classification. So gross tax revenue, previously the government was collecting indirect taxes through excise duties, union excise duties, then custom duties, that tax on imports and exports, then corporation tax, that is when a company earns the money, income, so on that income they have to pay the tax that is called as corporation tax, that is a tax on income for companies. Or personal income tax, when we earn money we have to pay the income tax. Service tax, so number of types of services are there, so we have to pay the tax. So there are two types of taxes, direct taxes, indirect taxes. Where direct taxes, where we have to pay directly to the government. Indirect taxes we have to pay to the seller, then seller will pay to the wholesaler, wholesaler will pay to the producer will pay that tax to the government. So direct taxes and indirect taxes. So in this way the government was earning this revenue. Along with that non-tax revenue is also there. So interest received, dividends and profit. The government runs some enterprises like say Navaratna or previously ONGC, or say the government have some industries which provides them sufficient amount of dividend. So dividend is shown or profits generated from them. So these are shown as a non-tax revenue. So in this way this was the older classification of revenue received. If you have gone through the budget of this year, you will find out this is the latest, that revenue the classification, the first number is revenue received. Just now said that tax revenue net to the center. Must remember that there are two types of taxes nowadays, that basically direct tax and indirect tax. Within that direct tax I have just said that first one is corporation tax, second one is personal income tax. On regarding the third part is second part is indirect taxes. Nowadays the most idea is coming from the GST, goods and service tax combined together, and the third part is again the GST and the custom duties, and for some items the government is still collecting union excise duties or interest. So in this way we can find out tax revenue net to the center, then non-tax revenue. Just we have shown that the non-tax revenue means some part of the dividends and profits which they have collected from this public sector enterprises, as well as they may earn some penalties or collected from the normal citizens. So that is also shown in the non-tax revenue. or the interest which they have received from the already disbursed loans. So these are the revenue receipts. On the capital receipt, you can find out a recovery of loans. That means they have already given the loans, now they are getting back that loans. The other receipts and borrowings and other liabilities, that is the loans which they have created. One more interesting thing, dear friends, that sometimes it is an idea of the government that government actually sell. Nowadays, recently the budget has said that we are going to sell the LIC, or we are going to reduce our share in LIC. So the amount which they will recover by selling the shares to the public, where it has to be shown, it must be shown in capital receipt, but they can show it in revenue receipt for that year. So in this way, just to reduce or to increase their size of receipt and to reduce the expenditure or the revenue deficit, they can do such things. So revenue receipt, capital receipt, that will come to the total receipt, and similarly total expenditures, revenue account, capital account, and revenue account expenditure naturally includes interest payments, subsidies, defense and all that, so which are specifically shown in total expenditures, as well as grants in aid of creation of capital assets to the state. So all these things are shown in the total expenditures. Now the most important part, that the government should earn from revenue receipt, that is from taxes, and they have to spend in on the revenue expenditures such as salaries and pensions. So revenue receipt and revenue expenditure, but if there is a shortfall, then it is called as revenue deficit. That is the revenue account, the total expenditure on revenue account minus the revenue receipt on a revenue account. So in this way 10 minus 1 will go with this revenue deficit. Then most important part is number 16, that is fiscal deficit. Fiscal deficit, go through that 9 number, that is the total expenditures minus 1, that is the revenue receipt, definitely. So total expenditures minus the receipt and plus 5 plus 6, that specifically shows that borrowings or loans raised by the government is not the original income for the government. So exclude that borrowings, exclude the loans raised by the government, and then find out what is the amount of revenue income generated by the government. So the income generated by the government, excluding the borrowings, excluding the market loans, and then find out what is the total expenditure and the difference between the total expenditure and that revenue, excluding the loans, that will show us the fiscal deficit. So the area of importance nowadays is fiscal deficit. Everyone is interested to say, no, fiscal deficits are going up and that will lead to some inflation and so on. So in brief, this is the basic introduction of budget structure. Now where the government spends. So again, I have collected this slide latest from this budget of 21-22. So government may spend on pension, defense, subsidy, food, petroleum, agricultural sector and so on. So government shows that where exactly the government is going to spend. Again, the next column is not considered in that picture, which shows the budgeted estimates for 21-22. So how much they are going to spend on pension, defense, subsidies and so on, or for rural development, social welfare scheme, and what will be the grand total size of that. So in this way we can find out the basics of the budget. Now coming to the more important part of that budget, which is known as balancing the budget. So the expenditure side must be matched with the revenue side, income side. Income side must be matched with expenditure side. So there must be a balance between total income and total expenditure. In USA, in the year 1985, Graham Rudman, these are the two economists or government officials, they made an act, they proposed that act, and they stated that the act must be, or the act provides a guideline that the US government must maintain a balance between income and expenditure. They assumed, they defined they given a path that by the end of 1990, from 1985 to 1990, the deficit of the US government will come to the zero level. Unfortunately, this was not happen in USA also. They couldn't bring the deficit to zero level. In India, we have the same type of act, Fiscal Responsibility and Budget Management Act, FRBM Act, introduced by Dr. Finance Minister Yashwant Sinha, and he stated that we should not exceed the limit of our deficit, and deficit must come back to even 2% level. This was actually originally targeted. So FRBM Act was introduced again to reduce our deficit. Now you can imagine that why we want to have a balanced budget and why we want to have unbalanced budget. Everyone is telling us that we must have a balanced budget. So what is unbalanced budget? If income is more, expenditure is less, surplus budget, that is unbalanced budget. If expenditure is more, income is less, deficit budget. And the third one is balanced budget. So what is that deficit budget? Why we want to go for that? Why every economist is interested? Why every economist is interested to suggest that we should control the deficit? Exceptionally for the last year, we have observed that every economist is saying that deficit should be increased. The government should borrow more. In some exceptional years, we can say that government should spend more. How the government can spend more? The idea is very simple. The government can borrow the money from the people through NSC or some other instruments, or through the provident funds or public provident fund, or issuing some different type of instrument, or government. So in this way, government can borrow directly from the public. Government can borrow from the commercial banks, and the most important part, the government can borrow from Reserve Bank of India. Yes, the government can borrow from Reserve Bank of India. How? For temporary purposes, for temporary period, short-term period, and the government can print, RBI can print more notes also. So in this way, the deficit can be financed by printing more notes, by providing more loans to the government. The government provides one simple paper which assures the public or to the RBI that we will pay back this amount after 90 days or 180 days or some period. In this way, that paper comes from the government, that is from the President of India to the RBI, and the actual money flows from the RBI to the government so that the government can spend more. Why it is essential? It is simply essential because the economy is in the period of recession, from where we have started. What are the objectives? To avoid the recession, to fight the recession, people must have more money. How people can have more money? Government should spend more. Government can reduce the taxes, or government can ask the banks to provide more loans, or government can waive off the loans of the farmers or industrialists. In this way, people can have more money. When people will have more money, they can spend more. When they will spend more, aggregate demand will increase. When demand is more incentives to invest. More investment will lead to more production. More investment will lead to more demand for capital goods, more demand for labor. So people or labor or workers can have jobs. They can increase their income levels. They can increase their level of living standards. They can spend more. They can save more. Again, the money will flow into the economy. So after some period, more production will take place. So in this way, the deficit in a proper size can accelerate the growth of the economy. So initially there will be some inflation, but definitely after some time period, the inflation will go back to the normal level. So in this way, so this is an idea of deficit. But if you increase the deficit beyond certain limits, If you increase the deficit beyond certain limits, then it will be more difficult to control that, because only the flow of money will increase, but actually the production will not take place. So in this way, I would like to say that these are the basic ideas of the budget. I know that today I have not discussed anything about this budget of 21-22, but in my another lecture I will try to explain that what the government will have to do. Again, I must say that my name is Shishir Sandekar and I am writing regularly in newspapers. So in the Marathi newspaper Lok Satta, I have explained that what we exactly expect from that budget of 21-22, in which I have mentioned that the government should spend more. The government will have to borrow more. For what purpose? For development purpose, to fight the COVID, to fight the recession. This was the expectation. Similarly, Economic Times has also stated that the government should borrow more, government should spend more, and fortunately in this budget our finance minister Nirmala Sitharaman declared the same thing. Even if you will go through the Economic Times of 3rd February of 21, you will find out my writings on the same area. So this was an idea about the basics of the budget. So thank you very much for your kind patience for the listening it, and I hope that you must have understood the basic concept of budgets. So we can meet again and again to understand the basic concepts in economics on this channel. Thank you.